Welcome back. Still tuned into the market right here on ET Now. Karnataka Bank is in the spotlight. Let's decode the quarterly earnings with Srikrishnan AH, who is the Managing Director and CEO. Thanks much for taking time out. And I want to start off with your advances growth because it's outpaced the industry growth. But if I'm not wrong, for Q4, it was a low base. So going forward, do you think that you can achieve that goal of 1 lakh crore? What's the outlook for FY25 in terms of a 17% growth rate that would imply?
Good morning, and thank you for the opportunity. Yes, we have had a record here on various metrics, actually. It's not just the advances side. We have outperformed the market growth on the advances, more or less equalized on the deposit growth and overall business turnover and so on, including the profit after tax. Now, your question related to the growth on a sustainable basis, I think, we are focusing very clearly on the RAM segment, which is rural, agri, and mid-market. And we believe that, the growth opportunities are immense. We would be able to maintain more or less the same level of growth that's closer to the 20s. And we believe that we will outperform in this new financial year, that's FY24-25 as well.
Okay, fair enough. And what about your net interest margins? Because there has been a bit of pressure industry-wise. The bank as well saw a little bit of pressure in the quarter gone by. What's the outlook on margins? Will you maintain it above 3.5%?
It's not only in the quarter that went by, but also the quarter October to December also, where there was immense pressure as far as the overall deposit cost is concerned. But having said that, we have some good news as far as our advances is concerned, because we maintained a very healthy 9.9% yield as far as our overall loan yield is concerned. So as a result, it was a compression in NIM due to the cost of funds. So this year, we believe that post-elections, there's a very broad expectations that interest rates would taper out, one. Secondly, we are not in the bulk deposit market where we have to pitch for very high cost. We have granular deposits through our retail franchise as well as our digital means right now. So as a result, we believe that we will be able to grow. Our run rate on deposit is pretty healthy right now, and we believe we'll be able to sustain that. And based on that, the NIM guidance has always been 3.5 to 3.7. We believe that we will stick to that guidance even in this new financial year.
Mr. Srikrishnan, can you tell us about FY25? As it is on the street, people are putting their bets on any rate cuts to December, even post-December. In light of how the cost of borrowing and the system is going on, what kind of loan growth and NIMs are you aiming at for the full year?
Well, from the industry perspective, the industry has been growing at about 14 to 15% on the gross advances side and about 13% on the deposit side. And there has been a lot of flight of deposit, which into SIPs, the mutual fund industry, and so on. So bank deposits have always been under pressure in the last year or so. We believe that this will ease up primarily because of the interest rate scenario that's going to change. So as a result, a lot of the debt instruments and the fall in terms of the overall interest rates, which could be anywhere between, it could be even 100 bips or so. We believe that there is a lot of stability that will prevail in the banking sector. As far as Karnataka Bank is concerned, I had mentioned earlier that our profitability is intact. We had a one-time for the Q4, which was basically an actuarial provision, which was the reason that, only the Q4 dipped. But overall, for the year, we have grown by 11%, which had it not been there the one time, we would have grown over 15%. So we believe that there is a very sustainable growth on the overall, deposit and advances in the industry. And specifically for us, we have said this in the past. Our stated objective has been that by exit March 26, we will cross 100,000 crore on gross advances. We are about 73,000 crores as of March. And we believe that we are on the right trajectory to meet this target, which will be fueled by and funded by our own internal accrual on deposits. And also the reliance on bulk deposit is something that, we have really got away from.
Right. All right. Thanks very much for joining us on the show today.